So the big question is this: how are investors like us, who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. All right, guys, we are home free. We're almost there. I'm so excited. Today I want to talk to you, about when you have that stock, you have that day trade, you have that position. It's like an ABCD set. If you guys know ABCD sets, I teach it on the stock lecture series that I've got at www.johnfwooten4.com. And I also write about it in chapter 23 of the book. The ABCD setup's amazing because it has these insane profit targets, and the profit targets are like basically you have 1 unit of risk and 3 units of reward, right? So you look at the height of a run-up, and then you add that height to the top of the run-up based off of consolidation and just the ABCD setup. And once the D breaks through, you're looking at 3x profit, and you have your profit target, very, very stable profit target, right? You know exactly where you want to sell your position based on technical analysis. But today I want to talk about knowing when to take gains after a trade, maybe a swing trade, maybe a trade based on different indicators, maybe a trade based on MACD, stochastics, a trade that's maybe a little more long term, or maybe a day trade where it's just not you just don't know, right? There's a ton of moving averages to look at, and those moving averages are all going to be support and resistance levels, but sometimes it's hard to figure out the exact one to use to figure out your profit target. A lot of the times it just kind of depends on the situation, your experience, and then just going through capital markets and using 50, 100, 200 moving averages for long swing trades, stuff like that. And then for day trading, you have like a 9 exponential, a 20 exponential, and a 50 exponential, right? So ouch, and your VWAP, which is just insane, and Bollinger Bands, whatever. But something, at least with long-term portfolios, that I kind of got out of a whole lot of loss. It was back in the cryptocurrency days, and oh my god, my arm. What would happen is I'd have these positions, and I would go to sleep, and I would wake up the next morning, and the positions would be up like 1,700%, which is ridiculous. Oh my god, it was insane. They were up 1,700%. I don't know, like I talked about in that other episode, the cryptocurrency market at the time was just flat out ridiculous. It was insane. And then that happened a lot, and then there were also some day trades that I did like that. Not day trades, swing trades, right? So I would have these swing trades, and they would make tons and tons of profit, triple, quadruple my money, based entirely and solely on technical analysis. I remember one trade in Carvana, I was in it like $10, and the stock went to $65. It's freaking insane! Oh my god, I love it. It's all based on technicals, right? So the one thing I noticed myself doing, and maybe this is different for other people, I don't know, but it worked for me, and I want you to think about the underlying principles and psychology behind this stock market secret and how it can work for you, is what I would do before I realized what I was doing is I would take a picture of my profit, which was, a couple grand, whatever, and I would say, dude, look at this percent gain on Snapchat or social media, whatever, to show my friends, whoa, look how cool this is, stocks are so awesome, you should trade stocks. And I guess that's kind of what I'm doing now. I don't know. I just really like stocks, guys. So anyway, I would post a picture, right, of every one of these positions that had insane growth. And then what was really interesting is instead of taking profits, instead of exiting the position, at least most of the positions, I know I did sell half of AMD at like $35 or $34 or $33, which was awesome, when they had a huge downward wedge run up. I talk about that in one of the earlier episodes, which was great. But I know some of them, like Carvana, I just didn't sell. And I think, oh god, what was the cryptocurrency that just went up 1,700%? There were so many of them, guys. I think it was maybe it was Verge. It might have been Verge. What happened is it would go up, and I would take a picture of it. I'd be like, hey, check out how awesome this is. And then instead of selling it or taking profits, I would just hold it. And what would happen is that the position would actually peak, and the moment that I took a picture of it and put it on social media, that was the maximum value of the position. That was the peak. And then I felt like such a giant idiot because I didn't freaking sell it. Instead, I decided to take a picture of it and then like pretend brag about it, which was the dumbest thing I could have done. Looking back, hindsight 2020. But for real, man, it was just really, really not the smartest thing to do. I was focusing more on external satisfaction and acceptance rather than, internal. Dude, you just made all this money. You should probably take profits and worry about your own portfolio instead of, trying to get this attention and trying to get people to trade stocks. Because look, I'll tell you what, that story, that the stock gains are still going to be there in a week, right? And I can still show people and teach people the technicals behind them and exactly why I got into those positions after I make my money from them, right? So it's important to really stick with your fundamentals and like, hey, I'm in this game to make bank. Let's make the bank. Teaching should be. I hate it when people go to school and then want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets we use to double our portfolios every 2 years and make upwards of 10% per trade daily.